Everything looks like it's operating just fine. I like this, and we're going to go live. Hey everybody, welcome. Nice to see you here. I'm Rob Booker, best-selling author of Adventures of a Currency Trader and Trading by Faith. Welcome to the broadcast. We're going to take a look at the dollar-yen before Fed Chair Powell speaks. Got a little bit of free music playing in the background. Everybody always wonders what the heck that music is, so I thought I would let you all know what that is. Welcome to everybody that's brand new. Nice to see you here. I get a lot of questions from those of you who are wondering why we're not trading spot Forex during these broadcasts. Well, I have good news for you. We're definitely going to do that as well. I have a focus on the binaries for a reason that I'll share with you during the broadcast today, but of course we're also able to trade spot and whatever else we want. All right, let's take a look here at the charts and I'll share with you what I did earlier today. I'll make the chart a little bit larger and then we'll go from there. Now, I have no idea if this Fed speech is going to move the market substantially or not. In fact, I don't even necessarily even care if that's the case. I'm not going to spend a lot of money on any of the trades that I take, and I want to get as much of a return out of it as I can. For the purposes of this broadcast and the trading that we do here and the binary options that we do here, we're going to use a 60-minute chart and an option that expires within a couple of hours. And so what I want to do here is draw a line underneath where price is currently and above where price is currently. And I want to share with you a couple of other things. I want to see if I can make money if price travels below where it is right now, or if price rises above where it is right now. And in order to do that effectively, I could trade spot Forex, of course. I could say, hey, I'm going to set an order to buy above where the market currently is and an order to sell below where the market currently is. But that's not as effective because when the market is moving very rapidly, I won't necessarily get filled on those trades. And so I have the possibility of being right in my analysis, but having made no money or even lost money because I couldn't get filled in the world of spot trading on the trade that I wanted to take. And that's why around the time that there's news, I really like binary options because they give me the chance to win if price goes outside of a certain boundary. And because price doesn't usually go outside certain boundaries, I don't have to pay a lot for that trade, and I can risk a small amount of money in exchange for the potential to make a larger amount of money. Now, trading involves a substantial risk of loss and is certainly not suitable for all traders. However, that's what I like to do, that's what I like to see, and that's the reason that I like to use binary options in this exact instance. Now, as far as spot trading is concerned, I think there are some trades here that I want to talk about that use other things that we're going to look at on the screen. So for those of you that are spot traders, I want you to feel welcome and thanks for being here and glad to have you here along for the ride. I want to take a quick look at the comments coming through. Let's see here. We've got a bunch here. James says, amazing trading live. Hi, Mr. Booker. Thanks for the lessons on YouTube. I'm on lesson 13. Welcome. Mark says, glad to be here from Southern California. Nice to see you, Mark. Stuart's here, first time on the broadcast as a new lifetime member. Welcome, Stuart. Nice to see you here. Mike says hi from Oxford, UK. Jim's here from Port Lavaca, Texas. And mean reversion trading. I'm a new member, but I'm a 3 years trader where the strategy is to average down and build my position slowly. And you went from early this morning, the market moved about a half hour. Oh yeah, last night we did some live trading of the Australian interest rate decision, and a bunch of those trades turned out profitably. However, I was already asleep when those trades went into profit. Okay, anyway, we'll touch on that a little bit later. I want to get back to sharing the screen and talk a little bit about the trades that I already have. So I wanted to trade if price went outside the boundary of where it is right now. So I chose earlier today and published a video on YouTube about these two trades. I'm going to turn the music off here while I describe that. I know some of you don't care to listen to that anyway. Okay, I like to listen to it while we do the broadcast. It keeps my mind going, but it's irrelevant and not necessarily important. Okay, I want to make money if we rise above 113.40. 113.40 is right, excuse me, that's below. Let me switch around what these two options are doing. There we go. Okay, I want to make money if price rises above 114. That's right here, this red line that I'm moving back and forth across the screen. Now what I did was I bought two contracts for $8.75 each. That means I risked losing the $8.75, but if this trade turns out to be profitable, I'll make $91.25 from each of those contracts. So I'm risking 8 to lose 91. Excuse me, I'm risking 8 to gain 91, potentially. Now this trade could expire worthless, and that's fine, and that'll be that if it happens. The next one that I wanted to trade is I wanted to make money if price fell below where price has been today, and so far it's been as low as 113.50. So I traded a contract that said, I'm going to say that I want to make money if price falls below and stays below 113.40. I sold that one, so I risked $8.50 to make $91.50. And you'll see here, when you buy a contract, you see the smaller number, and when you sell the contract, you see the larger number. And when I'm selling a contract, I want to see the largest number possible. That means I'm risking the least to make the most. And when I'm buying a contract, I want to see the lowest number. I'm risking the least to make the most. Now, of course, you can trade in the money contracts. For example, we could look at other contracts that are in the money already, and we could say, for example, let's do the 3 p.m. contract, the dollar-yen, and let's say we want to trade something that's closer to in the money. We were going to stay above 113.60. It's at 113.57, so we're really close. I could, if I wanted to, risk 76 to make $23. And theoretically, and the emphasis is on theoretical at this point, theoretically, that is a higher probability trade. Now, I'm not certain that that's a high probability trade or not, but theoretically, that's what the thought is, that it's close to that price already, so it's likely to stay near that price. And when trading binary options, or really any kind of trading that you do whatsoever, there's a tendency to focus on the big moves and look at the trends and think about the people who made a lot of money and people who made money off of really big trends. And there's a tendency to focus on all that kind of stuff. However, now, most of the time, price isn't going out of control, and most of the time, price is staying right where it is and staying right where it was, and it's not going to really trade outside of a range most of the time. And so that's how these are priced. That price is probably not going to move outside of this range, so it's really expensive, and so you have a high probability, theoretically, of success, and so you're not going to be paid as much for being right. So maybe you think, wow, that has a really high probability of success. I'm definitely going to trade that because, man, I like to make money, and I don't care about the low probability of the trade. I just want to make money. Maybe it's low probability, but there's a high reward. Well, I don't want that. Some of you out there are saying, oh, listen, I want a high probability of success. I want to win as often as possible. Well, you're going to have to spend a lot of money to do that. You'd have to risk 76 to make 23, and that just doesn't seem to be worth it to me at all. All right, let's go back to the charts and see what's going on here. All right, audio's good. So I traded ones that were a little bit less expensive. Now, the ones I traded earlier that were $8 are now $4.75, meaning all price has to do is get above and stay above 114. I'm going to make this bigger so that you can see this. All price has to do is get and stay above 114 in the next 2 hours and 19 minutes. And that would cost me $4.75. And the maximum win, look at this, if I trade one of these, the maximum loss is $4.75. You can see that at the bottom. And the maximum profit would be 95. Now I could trade 10 of those, and my max loss is $47, and my max gain is $952. It's a pretty great risk reward, especially when we're looking at economic reports that tend to move the market a lot, like a non-farm payroll report or an interest rate decision. Now, this is a Fed speech. I don't know if this is going to move the market a lot or not. I'm not entirely sure if this is going to move the market at all. But imagine, it's not that hard to imagine that for a Fed speech, the market's going to move 30 pips. That's not that hard to imagine. I don't find that difficult to believe. And so if I can get paid $952 if it rises 30 pips and stays up there, that seems like it's pretty worth it. I don't have to trade 10 of those. I could just trade 5 of those, and I'm risking 23 in that case for a potential to make 476. Now, I'm going to do that every single day of the week. That just seems to me to be completely reasonable. Now we're going to see in the open positions that I have 7 contracts open. My average price is $5.89. I'll make that bigger so that you can see it if you're watching from home. Now what I want to do is I don't need to stay in this all the way to expiration. I have no need to stay in this all the way to expiration today, especially since I just want to make money and go home. So I paid as little as possible. So maybe I could just say, hey, listen, I'll sell, the maximum price that I could sell it is like 99 or 98. Well, what if I just said, hey, if it reaches a profit of 80, I'll go ahead and sell all 7 of those. So that's working. So if price really shoots upward and this option becomes suddenly much more valuable, I have a limit order or a take profit already in place. Let's see how inexpensive ones that bet that price is going to fall are. 113.40s. Those are $6. That's pretty inexpensive. So I could trade 1, 2, 3, 4, 5 of those, risk 30 to make 470. I'll take that trade all day long. I'll look at my open positions, and now I'm long 7 and short 7. One side's going to lose and the other side's going to gain. My average price was about $6.61 or 71 cents, and my total maximum profit on those is $93.29. And what I'm going to do now is I'm going to put a limit order in to get out if these things fall. Let's just say price falls and I can get out at 20. Remember, I start with a high number and get to a low number for the sells, and start with a low number and get to a high number for the buys. And there we are. I've got my working orders in place so that they're basically take profit orders. And I've got my order history there. I've got my open positions right here. Let's put all those right next to each other. Okay, so now I've got all that in place. We're 2 minutes away from the release of the Fed speech, and once again, there may be absolutely no movement whatsoever. We may get no movement at the release of this speech. It may just be a complete, not waste of time, but it just may not work, and that's perfectly fine. Let's take a look at your comments before this comes out. Wow, lots of comments. Let me know where you're from. Let me know how you're doing. Glad to see you here. Let's see how many people we've got here. We've got a good stream quality. We've got 150 people here. That's great. About 2,000 of you will be watching this over the next couple of days, so I want to make this as informative and instructive as possible. You know I'm here because I love you, right? First and foremost, you know that's why I'm here. Serge says salute. Rob, hi Serge, nice to see you here. Bakal says hello from Kampala. Ivan says hi. James Taylor says hi. Skeletor says hi from Puerto Rico. Gary says hi from Denver, Colorado. First time here, says Isaac. Thank you for being here. Nice to see you here. Welcome to all of those of you from Africa or Ghana or everyone else. Gary says, can you do OCO orders on Nadex? Not right now. Not that I know of, but I'm going to figure this out. I'm also going to get access to their API, Gary, and I'm going to build a mini platform that allows us to do that kind of stuff somewhat automatically. All right, let's go back to the charts and we can take a look at some other stuff going on. Spot trading. I want to tell you a few things about some spot trades that I took, but I want to just say right now I'm long the British pound Canadian dollar. We have bullish Knoxville divergence, and the RSI was overbought on 5 time frames simultaneously. We're going to come back to that in just a little bit, but we first want to wait for this Fed speech to come out and see if there's any movement at all. I want to repeat again, I have no idea if there's going to be any movement, and frankly, I can't know it, so I shouldn't care. And the best that I can do is plan ahead for a possible move, but not attach myself or my happiness to some kind of particular outcome that I really wish would happen. And it should already be out. I don't really know if the whole speech was released or if anything came out or if he said anything at all. And it's possible that he didn't. It's possible, like I said, that I've timed this thing exactly incorrectly and that he's saying nothing of importance, that his speech wasn't released in full at 11:45 a.m. my time, and that all we have done is bought 7 and sold 7, and there's nothing great that's going to happen from that. And that's perfectly fine. I love doing this, and I love getting this all set up and ready to go, and I have everything in place if it does move, and I've risked very little if it doesn't move. Risked 5 to make 95, and risked 4 to make 96, or whatever those numbers are. Those are pretty great numbers, and I'm happy to do that every single time. It doesn't look like things are moving right now, like at all, and we'll see if he says anything, and maybe we'll check the Twitter stream and whatever else. But we've got trades in place that have 2 hours to be successful. And if he really is speaking right now, which I'm guessing he is, but I'm here, so I can't be there, and I'm sure there's probably some live broadcast available of his speech. If he is speaking, the dollar's going to move, and it's going to move within the next 2 hours. So I like my setup here. I like what I've done. Now, for those of you interested in spot trading, what I want to do is give that a chance as well. I'll see what the comments are like, and then we'll move over to spot trading. Jesus says hello from Kissimmee, Florida. Chris says, will you trade on Australian news tonight? What Australian news is there tonight? If it's not red, I don't trade it. And I'm looking at the economic calendar here, and I don't see any Australian news tonight that's red. If it's not red, if it's not major economic news, then I don't trade it. I'll let you take a look at the calendar with me and you can see what I'm seeing. Do you see what I see? No economics. Woo doo 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 doo. The tech guy says hello from Virginia. He is speaking. A couple of excerpts on the Twitter. Mike's helping us out. Live speech at Yahoo Finance. There we go. I don't think we can replay that. I don't want to get into any kind of copyright infringement, so I'm not going to replay that. I'm curious to know who the people are in the background. Who are the people in the background? Oh, of the speech. That's pretty hilarious. I think that's pretty funny. All right, I want to look at some charts. Who's ready now to look at some price action? Who's ready to look at some charts? Who's ready to look at some other trades? Maybe some spot trades, maybe some charts. Maybe just do some other stuff. If you're interested in that, if you look forward to that, if you want to do that, then that's exactly what you're going to do. And Mike is pushing through some really great updates. Higher wage growth need not be inflationary. That's bad for the dollar, bad for interest rates. Joel says, show me the charts. Then Joel shall get what ye shall ask and ye shall receive. Oh, let's do this though. I'm going to play a little music in my background here because I know you might not like it, but I'm not going to look at these charts without a little bit of something going on in the background. So I'm playing some free music for vlogs and crap. He backs ongoing gradual hikes for an extraordinary economy. The economy is wickedly strong right now. Okay, I'm going to make a copy of this chart layout, and we're going to walk through some charts, and I'm going to share some stuff that I'm looking at. Okay, check this out on the British pound Canadian dollar. For those of you that are Finch traders, that's the robot that I use. I want to walk you through what I see on the chart and what I think it means, and how I would use a robot to trade it, and how I would use Spot FX to trade it. Let's go full screen. Yeah, yeah, oh yeah, full screen. Okay, here we go. For those of you that don't know about my indicators or how I set up my charts, I'll quickly walk through everything. This red line here is Knoxville divergence, and so are these red lines. There's two of them. It's kind of hard to see, but there's two of them. That is an early warning sign. It's not a guarantee, but it's a suggestion that price could potentially rise. It's more powerful and means more after we've seen the relative strength index go overbought or oversold on 5 time frames simultaneously. These green lines that you see on the screen, those are called RSI 5 lines. That means the relative strength index was oversold on 5 time frames simultaneously. As you can see at the bottom of the chart, the relative strength index was oversold in 2 spots on this 1 hour chart. The chart. You really shouldn't say that on a live YouTube video. Okay, on the 1 hour chart, it was oversold, but it was also oversold on the 1 minute, the 5 minute, the 15 minute, and the 4 hour simultaneously. All of those charts simultaneously. And when that happens, a green line pops on the screen. And these two things together, this massive oversoldness on 5 time frames at the same time, plus the Knoxville divergence, leads me to believe that we are going to see the British pound Canadian dollar move up. But I don't want to like bet the farm on that, right? That's stupid. That's idiotic and stupid, and we're not going to do that. But I do think that we have a chance here to take a trade. And let me tell you why else I like taking a trade. Above the price right now, we have the monthly and the weekly pivots. The monthly pivot is purple and the weekly pivot is green. In the first few days of the month, price tends to make a move back toward its monthly pivot. And the monthly pivot is above price right now. It's almost like before the month starts off, price wants to return to and touch the monthly pivot. And that's why I favor buy trades. Now, if you want to be even more careful about it and you want to maybe prevent yourself from getting into something that is garbage, you might draw a trend line across price and only take a trade if price moves and closes above that trend line. Now, you could also, if you run the Finch robot, you could turn the Finch robot on to buy only. That's one way to do it. You could use a T6 robot, which is a trend trading robot, which will start stacking trades and will add to a winning position if price goes up from here. Now, I've got my MetaTrader on my international trade copy account. I think I can show you this. Okay, so here are the current open trades. Profitable $805 because the Swiss yen has been falling. Good. Okay, so I'm going to keep that trade open because I want to have that become as big of a win as possible. While you're sitting right here with me, I'm going to pull up the British pound Canadian dollar. And I've got to find the symbol and add it. Okay, I did. And now I'm going to pull up the trade window. And I'm going to set my order size to 0.6. I might trade as much of as a standard lot on my first trade, but I usually don't go bigger than that on my first trade. And I'm going to set a take profit at like 67, just below 67 even. We'll talk more about why that might be a nice profit target. I'll draw a line across that level. If you're enjoying this live trading stuff, subscribe to the channel, leave a like, leave a comment, let me know. All right, so back to this camera here, and we're going to go 66.96. And there's my trade that I'm about to pull the trigger on. I'm going to buy that. My Swiss yen trade, I only traded 6 mini lots, and I'm up $952. So it's not like that's a small trade size. Gosh, I kind of want to take the profit on that, but I'm not going to. I'm going to leave that open. So here's all the trades I have open right now. That's a live account. I mean, I'll show demo accounts. I don't think that's a big deal, but this is it's a live account. Let's go back to the US dollar Japanese yen, which is not moving anywhere. What a joke. I think Powell should light a dumpster on fire during his speech. He's like, inflation is low, but conflagration is up. I don't know exactly if that's even a real thing. Okay, I want to take a look at your comments because I love you. So back to here, back to here. How about Australian dollar, Canadian dollar? We'll take a look at that one. Where are the flock of seagulls, says Jim. Oh, thanks for the session on the Australian dollar last night, says Mike. Booked a total of 60 pips on a couple of my winners. Nice job, Mike. Mean reversion trading, says Rob. Who picks the right direction of the dollar yen is the winner today? Yeah, that's great. Matt Lococo is here. Hey, Matt. Oh, Matt, I miss you, man. I could really go for a Denver omelet right now. I don't even like Denver omelets. Is that Village Inn even still there? A million years ago, Matt and Sean and Brad and I had breakfast at the Village Inn. And it was like 47 below zero outside in Colorado Springs. Man, those are good times. Okay, let's look at the Australian dollar, Canadian dollar. Okay, back to the charts. Back to reality. Wow, the Australian dollar, Canadian dollar seems out of whack. Let's take a look at the correlations on this. You want to look at some correlations? Let's look at some correlations. I'm just rocking out to this. You might not want the music louder, but this isn't your YouTube live session. Oh dear. Holy fancy hair bun. Oh yeah, this looks good. All right, let me show you what I'm looking at. Let me show you what I'm looking at. This heart down here is next to the candles. Those candles represent the Australian dollar. This heart up here is next to a bunch of bars. That's the Canadian dollar. All of this stuff, because it's the Australian dollar, Canadian dollar, should be moving in sync. They should be moving together, because these two currencies are highly correlated. When one goes up, the other one goes up. When one goes down, the other one goes down. Occasionally, there is separation between the two. And after that happens, one of them has to fall, or the other one has to rise, or both. Look at this. We have space in between. Over here on the right. So the Australian dollar, US dollar needs to rise. Or in other words, the Australian dollar needs to get stronger. And the Canadian dollar, US dollar, and I know I'm quoting that in reverse, the Canadian dollar, US dollar has to weaken in order for this to get back into correlation. One way to express that trade is by simply buying the Australian dollar, Canadian dollar, which is the Australian dollar, US dollar multiplied by the US dollar, Canadian dollar. If I just blew your mind, you're welcome. I'm going to buy this too. I don't like to double up on stuff, but you know, like 2/CAD pairs. But this is too delightful to pass up. I'm going to buy this. I'm going to let you watch me do this. Some of you are probably going, well, where's his friggin' stop loss? Okay, I'm going to do this right here. You can see this. 6 minis. Going to buy it at 92.17. Profit target at 92.39. And I'll add more if that trade's a winner. May even decide to hold on to that trade for a long time if it's a winner. May even decide to sing some Chicago music out loud in public. Okay, so now you know why I took the trade, and you know how I took the trade, and you saw me do it. If this dollar yen is still not moving, just throw stuff. I mean, if the Fed chair can't move the friggin' market, what good is he? Where are the days? There was this guy on one of these, so I don't know if you might have heard, but there's this guy in the United States that wants to be on the Supreme Court. And there's this video of the hearings, and I swear that next to him was Ben Bernanke. And I think it was just maybe, you know, when people go crazy on a television show and they talk to their dead brother or whatever. I have a feeling that's exactly what was going on. I have a feeling that this Supreme Court nominee was talking to Ben Bernanke. Or maybe I was talking to Ben Bernanke. The repercussions would be enormous. Let's see what you are all talking about, and then we'll wrap this baby up. What will happen to gold? It will be legendary. Let me just say, I know that I could be wrong, and I'm probably totally incorrect. I think gold is going to $2,000 within the next 18 months. I mean, I could be wrong about that, but at some point in time, this whole party crashes. It's not a political statement. Like, I never thought the economy would be doing this well. I'm just saying, at some point it's going to crash. I hope it doesn't, but I think gold is going to just shoot through the roof. Times pi. This is why I haven't traded dollar or yen in a year. I can't believe it's not moving anywhere. Anyway, I'm going to play Billy Joel's Moving Out to this financial instrument a little bit later. And I just want to say thanks for being here. I mean, I know this was another riveting live trading session where nothing happened. Eventually we'll trade one of these bad boys live and it will just go out of control. I mean, as a matter of fact, the other day I was just playing around with the dollar Canadian binary options right during the crude oil inventories report. And it was like all hell broke loose. And I did a little Instagram video about it. It was just bananas. And I thought, wow, if all economic reports are this good. And now we're just sleeping through the... Maybe when it said Fed Chair Powell speaks, it was really just his chair. Anyway, I love the heck out of you all. If you like the video, subscribe to the channel, please. I'm getting close to 15,000 subscribers. I don't know if that really matters or not. I mean, it kind of does to me. I know it's petty, but if you could click the subscribe button on YouTube, that would be great. Click the like button on the video. Hope you learned something. If anything happens here within the next 24 hours, I will make another video about it. And I will post a link below this video in the description to the update to let you know what happened. Thanks for being here. Thanks for communicating. It's the sign of a healthy relationship is that we communicate with each other. Yeah. You know, communication is key. Hey, just a quick plug also. I might as well do this since I want to stay married forever. My wife launched her podcast. So if you go to nikkibooker.com and then you click on Nikki's podcast, it's a pretty great relationship-based podcast. And it's probably geared mostly towards women, but I like it, and I think you will too. Yeah, and not just because she's my wife. Like, we tell each other the truth. So, it's great. I hope you enjoy it. Thanks for being here, everybody. Love you all. I'll see you again tomorrow, maybe early on in the morning. Bye for now.